afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Went Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's another day of records for the markets. The Nifty scales the 11,550 mark for the first time ever, and Sensex 2 trades at record highs. Larsen & Toubro is the top gainer on the Nifty after it announced that it will consider a buyback this Thursday. Infosys is the top Nifty loser after CEO MD Ranganathan resigned from his post over the weekend. And the Met Department says intensity of rains will reduce over the next few days in Kerala as rescue operations go on in full swing.
Yes, MD Ranganathan's resignation has had an impact, the CFO of the company, of course. But this is what the markets are doing today. About 0.75% in the green. The Sensex up almost 1%. So strong gains for the benchmark indices. The Nifty Bank has been rather muted today. It's not been the front runner when it comes to contribution on the index, to be honest. And I'll tell you about the reasons why. The heat map will tell you. But just bring up the mid caps and the small caps one and the market breadth once before we move on to what's happening at the large cap end of the market. The market breadth is okay. It's in fact contracted a little bit from the start of the trading day. So the advanced decline ratio will come up on your screen, and you'll see somewhere here we did very well. It started off very, very well. We're still doing okay, but just a bit of a pullback from the highs of the day for the large caps. Still 3:2 in favor of the decline, in favor of the advances. So that's not too bad. But the heat map will show you what's moving and what's not, and you will see oil and gas firmly up there in the list of gainers. And of course, Larsen & Toubro being a principal mover too. So banks are not as important today, though HDFC Twins have done well. But look at L&T trading at the highest point of the day. Tata Motors has had a good run, but not really strictly the heavyweight. ONGC up 3%, Reliance up 2.5%. That is packing a serious punch. And then the HDFC Twins pitch in with their gains. So both HDFC and HDFC Bank are up about over 1.5%, and which is why in the contributors list, I think you will see Larsen, Reliance, and the HDFC Twins arguably would be the stocks that would be really packing on the gains today. Infosys, top laggard, 3.5%. Some pullback for Gale. Titan has been soft for most part of the trading day today, but those are few and far in between. Really, the one stock which is corrected quite strongly is Infosys, but that's about it. At the broader end of the spectrum, a few trends that all of us should monitor and keep it at the back of our minds. Stocks which are reacting to results or news or just moving around. So stocks like Page Industries and 3M India are continuing to move upwards. Both of them are trading at new highs. Both of them very expensive stocks, have a consumer flavor, but are up and about in the session today. Almost everything under the ASM category has bin beaten down. So 3, 4, 5% the kind of losses that have come into each of these stocks in trade. So not the happy hunting ground for these stocks. In today's session, and then a clutch of mid-cap movers which are trading at 52-week highs. So includes a Godrej Consumer, well, not strictly a mid-cap anymore, or a Britannia, or a Divi's Lab, certainly piling on some gains today, 6% higher. But Navneet, what are the futures and options markets indicating?
Well, Neeraj, we've been getting positive cues from the derivatives market for the last 2 to 3 sessions now. For Nifty and Bank Nifty futures, let's just pull up and see if there is any major build-up. Despite of futures now trading very close to the 11,600 mark, no major build-up seen. But let me tell you, the premium has been intact if you compare it to Friday's premium. So that's one good sign, because even at higher levels, that premium being intact tells you that there are no fresh short positions which are being taken, at least at these higher levels. For Bank Nifty futures, premium of 60 points and 6% higher when it comes to the open interest increase. Let's see if there is any sort of unwinding towards the end of the session. But positive cues coming in when it comes to the options data. Look at the Nifty options data. The maximum open interest so far for this series on the call side was at 11,500 strike. Now today is the second straight day when there has been unwinding coming about at that strike. What is that telling you? The call writers are now running for cover as Nifty scales above that mark of 11,500 in today's trade, and unwinding on the call side definitely is a positive sign. Now the maximum open interest has shifted from 11,500 to 11,600, which is also telling you the base for this market is also moving higher. Whereas on the put side, so far we were witnessing writing for 11,200 and 300. But look at today's session. After Nifty scale past the level of 11,500, there is aggressive underwriting which has come in at that level, almost 17 lakhs, or rather more than that, shares have been added on the 11,500 strike. So watch out for that one as well. In terms of stock futures, well, L&T tops my list because it's the top gainer on Nifty, and also it's the top contributor for the day on Nifty with 3.5% weightage. It's contributing nearly 23 to 25 points. By now we know why the stock's moving higher. There's a board meeting this Thursday to consider buyback, and that's the reason for the stock moving higher. But the volumes, look at that, that's been on the higher side. The stock currently trades at day's high, 7% higher. Fresh long positions also seen for the August futures. The other one is Federal Bank, down for the second straight day today, and the stock has been falling on very high volumes. The AVAT function of Bloomberg will show you the at least the volume for today, the predicted volumes for today as compared to the average volumes of last 20 trading sessions. That's the blue line. So watch out for this one, as aggressive shorting has been seen for Federal Bank on the futures side. And pharma stocks have been doing well since Friday. One of them being Divi's Laboratories. It's hit the 52-week high level. The stock's up for the fourth straight session. And look at the open interest surge for the August futures, 24% higher, clearly telling you that the traders are betting on the long side with regard to Divi's Lab.
Well, interesting moves there, but Navneet, Monday, and typically a day when we speak to global experts, you had a chance to catch up with Medha Samant.
Yes, I did, and actually the sort of, the feedback which we got with regard to the Indian markets, it still remains attractive, but the feedback was they're very stock specific, and overall in the emerging market basket, Neeraj, I think the pecking order is now China and then India. That's at level 2. So let's just hear out the key takeaways from her as to what she feels about the global markets, the falling currency, and also on Indian equities.
Yeah, so no doubt it's been a challenging time for emerging markets, equities as well as currencies, the whole asset class, and that's happening because of what's had events in Turkey. From our side, what we are saying is that it's still very hard to predict where this is going to go. It's not easy days for Turkey, but for the rest of the emerging markets, definitely there could be a fallout in the form of sentiment, and that's already been impacted. Now, if sentiment continues to be negative, you could see further outflows, and that's what we are looking at very closely.
Okay, since you mentioned about more outflows, actually I was just coming to the dollar index, which is somewhere about 96, 96.5. Where do you see that topping out? Because even from the Indian markets, Medha, in the recent past, we've seen, because of dollar index going up, we've seen the fund flows also going down.
Yes, exactly, and that's what I meant. When you see outflows, and if this continues in favor of, say, developed markets from emerging markets, then it would be, forcing or even impacting active investors to go ahead and take a more cautious asset allocation stance. And when I say cautious, we've already been quite sort of cautious more on that front right from the beginning of this year, and we've tried to enhance the defensiveness of our portfolios. So, that could just mean that taking a defensive stance for the year going ahead.
Okay, so you are saying one should remain cautious going ahead with regard to equities. But tell
Absolutely.
us, Indian currency, Medha, that too is also at record low. But if I were to compare Indian rupee vis-a-vis the other emerging market currencies and also the equities for that matter, we've been resilient. What is your reading been with regard to the currency market and also the equities in India? And what sort of investment strategy you guys are adopting for India in the EM basket?
Yeah, so where we see India is definitely, within Asia, it's an important element of the Asian growth story. You've got China on the one hand, which has been impacted because of the trade issues with the US. You've got India, which is seen to be almost like a barbell approach to China. What we've seen with respect to Indian equities is that there's a lot of resilience from the domestic investor, and that's providing a flow. They have been net buyers. What we also see with respect to India is just the long-term fundamental story, which is still intact. Short-term, yes, we do need to see some more momentum when it comes to economic growth, corporate earnings, but you do have some long-term compounders. So it's been a very stock selection approach from our perspective, because let's not forget that valuations of Indian equities are not exactly the cheapest. In fact, what really stands out from a valuation perspective today is China, versus India. So Indian equities are losing out when foreign investors look at the price that you pay for the growth ahead.
Point taken, Medha. Well, valuations definitely, if I were to look at it in the emerging market basket, it is on the higher side. So will it be right to assume in the pecking order in the EM basket, you guys prefer China first and then India?
Absolutely. In fact, we're looking at, we are seeing more bottom-up opportunity stocks that are looking good, which have been indiscriminately sold off in China. And we are focusing, our extra dollars on that side. We're also looking selectively at some of the smaller ASEAN markets, which have been sold off, and they've just been out of favor, very tough valuations. The story is turning for the better. So India does have some formidable competition there.
Well, if you look at China now, there is that cloud of uncertainty which exists in the markets globally because of the trade war fear between these two countries, US and China. Well, there's a meeting now which is lined up on August 23rd. Do you see any sort of resolution coming by? Because we've also seen Chinese yuan depreciating.
Yeah. So what, our view on the trade war is that it could be anybody's outcome. It's very hard. We don't think anyone knows how it's going to go, but it's likely to linger on. So it's a very negotiated outcome from both sides. There would be a war of words, and there'll be continuous monitoring of the situation. From a company or an equity or a sector perspective, the way we are looking at China is that, yes, there is a part of the economy that will be impacted as tariffs get set on Chinese goods. For example, auto components, textiles, some of the technology hardware, the smaller companies. But when you look at the composition of MSCI China today, 95% of the companies are really a play on innovation, consumption, and that's really the new economy which is throwing up with all these opportunities. So yes, there is a sentiment impact, and that could continue. But from a long-term fundamental perspective, some of these stocks have just been sold down in line with the broad market and are trading at very attractive valuations.
Just hypothetically speaking, let's say if there is no resolution which comes out from the meeting now between both the countries, do you see that spillover effect of trade war in the other countries also? To a certain extent, yes, but no. I mean, let's not forget that, Asia within emerging markets is a different story. You have economies which are less vulnerable when it comes to global trade, the export side, and you have companies which are now more exposed to intra-Asian trade. So, there will be winners and losers, and eventually it could very well turn out to be a zero-sum game. Okay. Meera, we are heading into election season, be it Spain this year or India will too be heading into general elections next year. If one were to invest in Indian equities currently, you said the approach has to be cautious because the valuations are high compared to other markets. So which are the sectors that you guys are looking at?
So it's been very stock selective. Within that, we are seeing opportunities when it comes to some of the financial names which are privately managed. So the private banks still continue to look very attractive from a risk-reward perspective. And one can argue that valuations are high, but the long-term story is still intact. We like some of the consumer names. We like selectively cyclicals, but a handful of those. And right now we are just watching to see how the whole election story unfolds.
And what did you make of the earnings season from the Indian markets?
I think as expected, no, nothing surprising out there. We do need to see corporate earnings coming through, and that's going to be the catalyst not just for India but even for Asia as a whole, that it's really the strength of earnings recovery which will determine where these markets go ahead.
Do you foresee any sort of EPS growth for FY19? Because in the last 3 years we've almost been flattish.
Yeah, we are actually, we're not sort of looking at too much forecasting in the future. At this point in time, we are seeing some green shoots that are emerging. If those continue, yes, then there will be a positive upward trend to earnings growth. And that's how we always start off every fiscal year. And this year is no different.
Okay, but do you also agree that the easy money, which was to be made from the Indian market, that phase is over now?
Yes, it's not it's a challenging environment, and I think it's also got to do mainly with the fact that valuation or the froth that built up, across the market, especially in the mid and the small cap space, that has still not completely been taken away. So when you look at India within an Asia ex-Japan strategy, it doesn't really stand out. So yes, the days of easy money are over. It is about stock selection.
Okay, so it has to be a stock-specific approach also when we also head into election season. Plus, do the macros worry you, by the way, Amita, because the trade deficit number that one saw for the month of July was somewhat, it did not go well with the market participants.
Yeah, it's been a bit of a challenging environment when it comes to the macro story. Things just get pushed by another quarter. We have seen some disruptive forces which are still playing out. But as I said, there are some green shoots that are emerging that we are seeing on the ground when we talk to companies. And from now on, we are really taking it from, every 6 months at a time and weighing each opportunity. I think at the end of the day, when it comes to India, yes, everybody is very familiar with the macro story, but it will be about the strength of the business models, the company business models, and individually how that plays out. And things take time in India. So for example, in Asia, when you say you invest over 18 to 24 months, the same cycle takes 3 to 4 years in India. So you have to be very patient.
And if one were to ask you about the downside risk that the Indian markets can face, do you think that will come because of global factors or because of domestic factors?
I think it's at this point in time, it looks like if there is a further sentiment downgrade, then we are heading into a complete risk-off scenario, and then all emerging markets, including India, would get impacted negatively.
All right, Meda, my last question. How are you reading the fund flow situation? Because we know that the Fed will be hiking more rates. So do you think now in the remainder of the year also fund allocation will be more towards developed markets like US and not emerging markets?
Yes, that's one thought that has come through from our investment team, and which is to say that if this Turkey situation unfolds further, sentiment gets impacted even further, and when you monitor the flows and if you see that trend towards further outflows, it would be in favor of developed markets, and that would mean that one needs to sort of adopt a more cautious asset allocation strategy.
Well, that's an important market voice. Meera Samant of Fidelity talking about her thoughts. Okay, let's tilt the focus back on our markets. We'll do a couple of things before we get in our experts. One is talk to our management on the back of the numbers and a brokerage note that has come out. Two is get in Darshan to talk about some of the key stocks that have had either a good or a bad quarter and what's some of the brokerages we've been on. First, the management. It's been a muted June quarter for Matrimony with the marginal increase in its first quarter profits. To discuss the quarter gone by and more importantly, the outlook ahead, let's get in the founder and CEO, Mr. G. Murugavel. He joins us right now on the phone line. Mr. Murugavel, thank you so much for joining in. I hope I'm pronouncing your name correctly.
No, you are saying it right only. Yeah. So, yeah, good afternoon.
Very good afternoon. Thanks so much for joining in. What explains this quarter? I mean, is it usually a flattish quarter which grows very tepidly year on year, or was this quarter a bit of an exception? Because I see single-digit revenue growth, bottom line just about 5%, margins being absolutely flat too.
Yeah, it's a combination of multiple things. One thing we're comparing against 18% GST versus 15% GST. If not for the GST increase, the growth would have been 11% on the matchmaking side. That's point number one. Second thing, our growth in the north and western market to some extent impacted because of heightened competitors' marketing spend happening in that region, plus also combined with the increased discounts. So we sort of the growth impacted in the north and west. That has sort of pulled down our overall growth in the matchmaking business. So Having said that, we are taking steps to increase our marketing spend to get the growth back on track. So we are doing a couple of things. One thing that we're definitely going to increase the marketing. Also looking at other things. We launched the vernacular apps. With these things, we believe that help us to get good profile growth, much better than the 13% growth we had in the Q1. So the profile growth comes back at a 15+%. We can have a better growth actually. Yeah.
Okay. So you believe that this uptick in the revenue trajectory improvement will happen Q2 itself onwards, or do you reckon this will be more back-ended and you will see the second half which is slightly stronger?
Hopefully with the second half, because the Q2 normally not a good quarter, because the Q2 has a lot of seasonality, because Q2 has across India, we have inauspicious period that normally has impact on the Q2 revenue. Normally Q2 revenue it goes down slightly, then bounces back in Q3. So it's on the back of steps what you are taking to drive the profile growth and other steps you are doing to increase the revenue. So we see the second half will be better compared to the first half.
Hi sir, good afternoon. You mentioned that you'll be looking to increase your market spends in the second half of the year. If you could just give us a number as to what will be the percentage of those market spends to your sales, or if you could give us an absolute number, that would also do.
The marketing spend around close to around 18%, around that much. So the most of the marketing spend is on the TV, offline the marketing channels, mainly on the TV side. So again, I will not give a specific number because the increase in marketing spend depends on whether the increased competitive activities, whether that's going to continue or not. It depends on how our competitors spending on the marketing side. But definitely it will move up by probably a couple of percentage because we believe that it's important to increase the marketing spend. While at this point in time, I'm not able to specifically mention what will be the actual quantum on the marketing spend, but definitely there will be an increase in marketing spend. So probably may move up by a couple of percentage points compared to the current levels.
Okay, and tell us what's been the growth in terms of profile additions during the quarter and also in terms of paid subscriptions?
The profile growth, while the overall profile growth has been close to 14% growth on quarter. In terms of the paid volume subscription, it has moved up from 190,000 paid subscription in the Q1 of last year to 191,000. And also there is the increase in ARPU as well. That average transaction value, what it was around 4,200, has now moved to close to 4,500 now. To be precise, it's 4,477. It's a combination of the volume increase and also the ATV transaction has driven the growth. Also, we look at underlying thing is that while that the increase in paid subscription has moved up by 1,000 numbers, I just want to explain. We have a various packages, 3 months, 6 months, and 1 year package. So there is a shift in the people going for higher packages. So that has impact on the volume of the paid transaction. So if you look at absolute number, and the volume would have been more than what it was, like 191,000.
Okay. Mr. Murugavel, last question from my end. The belief is that the tax rate, you've exhausted the MAT credits, etc., and therefore the tax rate will move up to 30% this year. Would that erode profitability for you as a company?
No, already look at it on a standalone basis, we are paying a full tax. So compared to what we are paying earlier. So the consolidated basis, we do have some benefits, but on a standalone basis, we are already paying full tax. That is actually having some impact on the profit already. So look at that tax actual value has gone up compared to Q1 of last year. So we are already paying full tax in a standalone basis.
Yeah, so which is what my question is. Do you reckon that even if the top line growth were to come about, I mean, could that be a possibility that for this year, comparatively, the bottom line growth will not be as strong because you will be paying full taxes?
Yeah, you are right, because we look at our EBITDA level, it will be better off. On the PAT level, yeah, it won't be because the country will be full tax. Yeah, that's right.
Okay, sir, before we let you go, you're sitting with good amount of cash of almost 170 crore. Any capital allocation policy that you're going to be adopting, your dividend policy? Plus, you were listed last year, your issue price was somewhere about 985, if I'm not mistaken, and the stock's actually fallen a lot from those levels. Any message that you would have for your existing shareholders?
Definitely, it's a great story because and the marriages in India is part of our culture. There are around 12 million marriages taking place. There are 60 million people, and we are a leader with the significant market share, around 60% market share. And so we believe that it's a great company and a great story. And we definitely believe that we have a substantial value to our shareholders in the long run. I believe at this point in time, yeah, we are not doing well compared to what we should be doing. Probably the market fully not understood our story and what they are building. Probably as you progress, people may understand and what they are building, and we are quite bullish and quite confident on what they are building. And I'm sure as you progress, we're able to demonstrate what they are building actually.
Okay, so we'll leave it at that note. Wish you all the best for the remainder of this fiscal year.
Thank you so much.
Well, that's the management of Matrimony. The stock clearly not doing well. The numbers were not so great. Margins were flat. In fact, the stock in today's trading session has also touched its 52-week low from its issue price of $985. It's corrected nearly 40%. 40% is actually for this year. Let's move on from Matrimony to list of stocks which Motilal Oswal has put up. A list of almost 10 stocks that the brokerage house is actually betting on after the first quarter earnings season. Darshan's here to take us through all those names, Darshan.
Yeah, so they've come out with a very large note in terms of the earnings season as such, but they've also come out with a focus list, which is basically 10 stocks which they believe could make you money in the near term. So that's what they're saying. So the first stock that they talk about is ICICI Bank. So what they're saying, it's a preferred play as far as the corporate bank recovery is concerned. The operating environment is improving for the company, and the target price that they've given is 355, pretty much somewhat in the line of what the consensus street target is there on the counter. The next stock that they like is Hindalco. Basically, they said that the acquisition that they did of Novelis a while ago is paying off. Now Novelis has acquired Aleris, which will actually help them significantly in terms of the growth there, and with the India business also doing well, they expect the counter to do well. So the target price that they have is 331, much higher than the Bloomberg consensus target of 297. Petronet LNG is something that they like. They're saying that there is overutilization at the Dahej price, despite the fact that LNG prices have actually doubled on a YOY basis. Rising prices of LNG and the completion of the expansion of the Dahej terminal and more traction at the Kochi terminal will help Petronet. So the target price that they have given is 312, which is one of the highest on the street and much ahead of the Bloomberg consensus estimates. ACC is something that they like. They're saying that the premium sales are rising for the company. They've done a lot of cost saving, cost efficiency. That is something that will boost the numbers for the company. Their target is 1633. The Bloomberg consensus is 1625. Now Ashok Leyland is the next stock that they like. They're saying that the company is looking to de-risk their model portfolio by only being present in the truck market. So they're saying from 62% they want to get the truck share of the total revenue to 50% over the next few years, and focus on other areas in terms of defense, in terms of the other plays, so that they like it. The target price is 149, much ahead of the Bloomberg consensus target of 135. Titan, they're saying that the prospect is very strong for the company, especially in the jewelry segment. They're rather bullish on it. So 1130 is the target price that they have. Sun Pharma, they're saying despite Taro week numbers, the US sales momentum was very, very strong, and that will gather momentum. The new approvals coming in from Halol will also help them. The target price that they have given is 700, much ahead than the consensus target of 570 that the Bloomberg has. Infosys is the next one. They're saying that the company is on track to meet the guidance. The management is rather optimistic on it. And the valuation gap to TCS and the global peers will narrow. So 1550 is the target, much ahead of the Bloomberg consensus target. The last two stocks are Bank of Baroda. They're saying that the asset quality will improve for the company. They see steady margin improvement that will come in with the target, and see a target price of 175 in line with the Bloomberg consensus target of 173. And L&T Finance is something that they like as the last stock. They're saying that the impressive turnaround and consistent growth is something that will aid the company. Very high target of 240, almost as high as JM Financial, which has a target price of 250, much ahead of the Bloomberg consensus estimates.
Wow, Darshan, thanks for putting all of that into perspective. That's as comprehensive as it can get. on some of these stocks which Motilal Oswal likes post the quarterly numbers. By the way, just before we get into our experts, some flashes on your screen about Navneet Education. They've approved the buyback now. They were anyways announced that they were mulling the buyback 6 days or 7 days ago. The price was not known. Now we know that the price is about 160. The primary motive, well, to arrest the fall in the stock price. If you look at this year's performance, Navneet Education has hardly moved, underperformed the Sensex by a margin. To be honest, this year's chart will show you 21% or 22% downtick versus the Sensex. Forget the mid caps. The Sensex rising about 10, 11, 12%. So it's a massive underperformer, Navneet Education. The idea of the buyback would be to arrest the fall in stock price. 6 days ago when the announcement came in, the stock was up about 5-6% at about 125, 126, currently hovering around that same price. But it's 2:30, that time of the show where we should get in our experts to try and figure out how are they approaching trade this afternoon. Sumit Bagadia of Choice Broking with us on the show. Moments from now, Emin Kapadia would also be joining in. And then, of course, we'll get to Rajat Sharma of Sana Securities on the fundamentals. But Sumit, good afternoon. Let's start off with you. How are you approaching trade today on the index? I believe the last time that we spoke, you remained bullish on the Nifty Bank. You were advising staying long. Is the advice still the same? And two, if somebody wants to initiate a fresh trade, what is that trade on either the Nifty or the Nifty Bank?
Hi, good afternoon. Yes, you are absolutely right. We've given a buy call in both Nifty and Bank Nifty, and we still maintain the same view. We feel that from here on, we will see extended move in index. And as far as the view on Nifty is concerned, I think immediately from here on, there is a possibility that we might see a move of around 100 to 150 points in the next couple of days. So those who have taken long positions at lower levels, they can hold on the existing long positions. And one can go ahead and initiate fresh long positions at the current market price. If there is a dip of around 30 to 40 points from present levels, then that should be used as a buying opportunity. And the stop loss should be placed at around 11,470 on lower side for the upside target of 11,650 levels in the next couple of days. On the other side, Bank Nifty is also looking strong to me. It has Bank Nifty is trading at higher levels. Now looking at the chart, it seems that from here on we can see a move around 300 to 400 points in the next couple of days. So for a trading perspective, one can initiate long positions in Bank Nifty at the current market price, with a small stop loss to be placed at 28,100 levels on lower side for the upside target of 28,500, and then we can see levels of around 28,700 also. So those who have taken long positions, they can hold on their positions, and one can go ahead and initiate fresh long positions too.
Okay, so that's the view coming in on the index. Hold on to your long positions, and Sumit also feels you can create fresh longs at these current levels. But let's check with Himain also, who joins us right now in the studio. Hi Himain, what are you doing? Because I think you've stayed away from taking fresh positions in the index.
No, but I think it's fine. I've been given a couple of call options, and I think that view remains because we saw 11,500 being taken out. We've sustained about that. I think the first indication came up on Friday when the OI, which was around 45 lakhs, reduced by 9 lakhs, indicating that, okay, we're ready to take out 11.5. And I think, yes, so coming to the Nifty, I think it looks fine. Maybe a small cool off here and there, but a buy in terms of the 11.7 call option at 22, stop loss 17, target 32. So outlook remains bullish.
Okay, bullish outlook on Nifty by the 11,700 call is the advice from Himain with the target price of 32. Let's get you some trading strategies in terms of stocks today. And Sumit, I'll come to you first. What are you recommending?
Well, I have two recommendations for the day. The first one is from auto space, and that is Tata Motors. After a long time, we have seen that Tata Motors has shown good recovery from low levels. Now, if the closing is seen about 270 levels, then we can see extended move till 285 levels in the next couple of days. For a trading perspective, those who have taken long positions, they can hold on the existing long positions, and one can go ahead and initiate fresh long positions at the current market price, with a stop loss to be placed at 260 levels on lower side for the upside target of 280 and 285 levels. The second stock for the day is from metal space, and that is Hindalco. Hindalco, after a correction, it has given a upside move, and then it has shown a consolidation on charts, and now from here on we are again seeing a upside move. That says that from here on we can see a move till 235 or 240 levels. So for a trading perspective, one can initiate long positions at the current market price, with a small stop loss to be placed at 218 levels on lower side for the upside target of 235 and then 240 levels in the next couple of days.
Himain, your ideas?
Yeah, I think buy calls both, Neeraj. Firstly, a buy call on Bajaj Auto. Now it's moved up a bit by the time I gave the call, but even then, buy at around, maybe I need to tweak it a bit, buy at around 2720, stop loss 2670, target 2820, and the second one is a buy call on Vedanta Neeraj at around 217, stop loss 212, target 227.
Interesting. Some commodity names are making up with a bounce back as well. Vedanta particularly up about 2.5% or 3% in the session today. So not a bad start to these stocks, not a bad day for these stocks, and not a bad start to the week as well. Lots of large caps today and in focus. It's not been, I mean, as strong a day for maybe the BSE 100 as it is for the Nifty 50, because those names, a bunch of them are doing rather well for themselves. Rajat Sharma of Sana Securities joins us right now on the show with his thoughts on what's happening in the markets, what's happening with specific pockets, and a clutch of large cap names to talk about today. Rajat, good afternoon, good having you after a while. Thanks so much for joining in. What have you been doing, Rajat? Lots happening, global markets, local markets, rupee depreciating, a lot of people correlating that move to buying in IT. Oil and gas seems to be doing okay. Some bounce from the brink for Tata Motors and the likes. What are you observing in the large cap space?
So, Neeraj, yeah, first of all, it's always nice to talk to you. I've not been on your show for a very long time. And that kind of is more because, things have been busy and things have been good at, business end. But then the thing is, it's a very difficult market to, do anything in, because other than some of the sectors which you just spoke about, IT and pharma being the other one, a lot of the other sectors overall look really, really expensive. Now, some of the stocks that you spoke about in the large cap space, interestingly, all of these stocks I do find comfort in, and maybe there is, some reason why I've always recommended these stocks for the last 1 year. Like if you ask me the last 1 year, I've been really positive on IT, I've been really positive on pharma. IT has started moving. I don't think it's anywhere close to where it should be trading. Pharma has not really started moving that way, but I think going forward, both large cap IT and large cap pharma will do well. I mean, these are cyclical things. Markets itself are cyclical, and these are simple things to do, to buy stocks in these sectors. And sometimes, simple things make you a lot of money. So why complicate things at all? Now, the difficulty with explaining things to clients at this time or for investors is that when markets move the way they're moving, it's very difficult to make sensible decisions in terms of not buying stocks which are extremely overvalued, mostly because those stocks keep moving higher and keep moving higher very quickly, because that's the nature of liquidity driven bull markets. Whenever there is a correction, those are the stocks that would correct really sharply. So my advice to clients is to preserve capital as much as you can, because look, if markets keep moving up by about 12-14% year on year for the next 3 years, and even then they crash by about 10-15%, you would have made not any much higher amount than what you would have made by investing even in a 8-9% fixed income instrument. So unless there is a compelling case of buying a certain stock, I would advise clients to stay away from the markets. But the thing is that whenever the crash happens, you will see a lot of sectoral rotation, and that's where I believe a lot of money will come back into these sectors that you spoke about, IT and pharma, and some of the stocks that you spoke about, Tata Motors. I mean, this is a stock which is available at ridiculous valuations. It's got an EPS of about 58. It's got a price earnings multiple of 4.6 on a trailing basis. So actually, I would be worried about buying into this stock, because no matter how many times I look at this company with domestic operations improving, they're still struggling with the JLR operations, particularly in China. But when I look at this stock, I'm wondering, is there something I don't know which the market knows? So that's where you start calling, you start trying to find out what's going on. I'm not aware of anything because of which the stock should be, where it is trading. And we've been constantly buying this stock from higher levels, from lower levels. We've been adding on to this stock. So I'm, very, very positive on this stock also going forward, purely on valuations.
Okay, purely on back of valuations, Tata Motors looks attractive, and what a great move actually we've seen after a while for this counter, which was actually touching 52-week lows in the last few weeks. Himain, on the charts, what do you make of this move of 4.5%? Has the stock bottomed out?
Yes, finally, after frankly speaking, a couple of hits and misses, it's, I think, finally done what it's promised to do. So the outlook has turned positive, and more importantly, I don't think it's a flash in the pan this time around. I think the medium-term picture is improving. we've seen an oversold situation, positive divergences, and crossover buys coming in. So at least from a medium-term point of view, I'd stick my neck out and say the worst is over. Longer-term point of view, we'll still need some more confirmation, but as of now, I think short to medium-term worst seems to be over.
Okay, that's the technical view coming in on Tata Motors. Rajat, coming back to you, since you said you like, spaces like IT, pharma, and we've seen Nifty IT is actually the top sectoral gainer also for this year. But I know you've been liking stocks like Infosys and ITC for the longest time. But the new one I'm seeing on this list is also L&T, which is in news today. What did you make of the buyback offer which they're about to consider this Thursday? Do you think it's the best capital allocation policy that the company can adopt?
I really don't think it's because of capital allocation that they're doing it. I think the management genuinely believes that the stock is undervalued, and this is a great time to buy the stock. Look, this company still has debt on its books, so if they wanted, they could have actually done something about that. But then, personally, my sense is going forward, L&T as a company will actually demerge into two, three other units, which has been the talk for a very long time, because they get a majority revenue from infrastructure, hydrocarbon and power. Now these three verticals, if you see, don't have much integration with each other. And the other thing is that they listed L&T Technology Services a year and a half back, and they have to bring down their stake in that to below 75% before the end of next year, September 2019. They've already announced that they're going to sell 41 lakh shares in L&T Technology at a floor price of rupees 1400. So that is also cash coming into Larsen & Toubro, which is the parent company, the promoter of L&T Technologies. So yeah, I think a lot of the money that comes into the company, they would consider buying back shares of Larsen & Toubro, because smaller equity shareholder base would be great. And I do believe the stock is extremely undervalued, as is most of the infrastructure basket. I mean, you see the last 10 years, infrastructure stocks have really done nothing. The whole infra index is gone nowhere. It's delivered 0% or 1% in the last 10 years. So I think it's more to do with the genuine undervaluation, which the company believes is a good time to take advantage of.
Interesting. So would you be a buyer, Rajat, here, L&T?
Absolutely. I'm holding this stock. I've been holding this stock for a very long time. So I'm one of those investors who's holding this stock even though it has done nothing. And hard to tell clients why we're doing it. But having said that, you factor in all the dividends and factor in the quality of company that you're holding. It's not such a bad stock to hold. I've seen a lot of mid caps and small caps destroy a lot of wealth in the last 1 year. We still are very positive, both in terms of returns and future outlook on this stock. So I'm holding this, and I think investors right now, if they were to play out what happens on the 23rd of August, yeah, I mean, a good time to buy it.
Okay, interesting. And that's what makes the market so beautiful, convergent views. Ajay Srivastava of Dimensions Corporate Finance spoke to us a little while back. And, well, amongst the slightly longer conversation that we had with him was about L&T and what does he make of the buyback plan. And, of course, then followed up with what happened this earnings season. Hear out what he had to say.
It's a dilemma that we'll all go through in the market, that what's a good time to take it off the table, because whatever you've taken off the table has given you spectacular returns thereafter. So I would tend to believe that this is a time to just calm down, just keep a portfolio. This is not a great time to add too much on it, barring a few sectors where you are short in terms of a portfolio composition, you add it, but this is a time to just enjoy the ride. This is not the time to add dramatically, this is not the time to sell out. Just let the market do what it's doing at this point of time, because on the one side, the market fundamentals are strong in terms of momentum. On the other side, we have the issue with the rupee, the current account deficits, and all the issues which will come with that, including the foreign currency loans taken by the Indian corporates. So the whole hosts are negative, there is an economic recovery, and there is a market momentum. kind of a balanced situation, so you wait it out and see how it, unless one of the other two breaks, there's no need to really book anything at this point of time. I think just let the position ride through. If you're in the right stocks, there's no reason to just panic out and cash out. Just keep it going. It's a good thing happening. Enjoy the ride.
You know, the interesting bit also is, Ajay, is what's happening to large companies which are arguably in the growth phase, or at least people believe they're in the growth phase, but they're coming out with announcements which are, well, counterintuitive, so to say. L&T, a case in point. You would expect the largest infrastructure stroke construction company to need all the capital it needs in a high growth phase, and here it's looking to return money to investors.
You have had discussions in L&T for last maybe almost 7 to 10 years, and I keep saying this is poor management, full stop. This is poor management. This is trying to desperately raise its share price because they ended up with a lot of stock options. When they sold the, a lot of people don't remember, when they sold the cement business to the Birlas, they got a lot of stock options. They're trying to be desperately raising the price up. You're absolutely dot on. In an environment like this, where infrastructure assets in their backyard are available for dime a penny, a business is available, they are doing a buyback of shares. It's incredible, absolutely incredible. I think, this is where I keep questioning, who are these independent directors? What's happened to institutional nominees? This L&T should be the spearhead for India's infrastructure foray at this point of time. And look at what it's doing. Instead of putting money in highways, townships, reality, and Blackstone can come from outside and buy $10 billion of real estate and develop in this country, and L&T wants to return money back to the shareholders. I think this is one of the most bizarre cases of misgovernance, I would say, in India, and I would really appeal to the independent directors that they need to shoot this down and say, listen, let's put the money to work. Are you telling me that L&T has no other avenues to grow? Let it grow at L&T Finance, put another 1,000 crore equity there, put another 1,000 crore equity in L&T Infotech. They're doing well as a company. Now at least they turn around. And they had the mishaps as well. Let's be honest about it. Like L&T Finance hit a 1,000 crore write-off in their opening reserves, for instance, using the Ind AS. But the point is that you got companies which can do well, and this is one place where the board of directors should actually shoot this proposal down and say, put the money to work. India needs it. It's not about just the company. India needs this money to get to work. 4,000 crores of equity equivalent. You can borrow 8,000 crores. You can talking of 12,000 crores of projects that L&T can do tomorrow morning instead of a buyback. Now that's a big fill up to GDP and the economy. What the hell is happening? We don't know.
So from a shareholder perspective right now for the stock L&T, which trades closer to 1,300 odd levels, while it's not done much in the year, so there have been good entry points for people to come in. But do you suggest that you probably wait and watch?
That's what I said. L&T has been a poor performer in the stock market. Let's be honest about it. So not many savvy investors have got L&T in their portfolios. Only institutions got a portfolio. Now, because of a buyback, should you buy? No. There's a difference between an Emphasis announcing a buyback and an L&T announcing a buyback. Emphasis by nature is a cash generating entity. So an IT company, it has huge cash reserve. It does a buyback. That's good for the shareholders. L&T is a company which is the growth segment of Indian economy, is doing a buyback, which is the most ridiculous concept. So as a shareholder also, I would say that if you are signaling to me that you have nothing else to invest in, then why am I putting the money with you? So even if I invest today, all what will do is future cash flows, you'll give me another buyback. So where is my return on capital employed going to exceed at least 14 to 18% or 18% plus that I want from equity investments? Otherwise, I might as well put the money in FD at 8 to 10%. So if you're not going to give me 18%, why am I going to give you the money today? So just the buyback is not going to enthuse people to start putting money in this stock. I think, in fact, you would try to sell off and says 5% increase there, de do usko share, let's get out of this thing, let's go to invest something which is growing for a change.
Okay, that's Ajay Srivastava of Dimensions giving his views on markets as well as L&T. While most of the market participants we've interacted with, I guess they've given it a thumbs up to this news. Let's see whether it fructifies or not on August 23rd when the board of L&T meets. But I just want to highlight a few stocks before we get some more more views going. Sequence Scientific, I guess, is sitting at day's high right now. It's gained almost close to 14 to 15%. And chemical company SH Kelkar, that too has seen strong gains. In fact, the volumes for both these stocks too have been on the higher side. So as we speak, SH Kelkar has come off the day's high, but is still sitting with gains of nearly 8%. Rajat, coming back to you on other picks that you've chosen, one of them is Federal Bank, and we've seen the stock in the last two sessions has taken a huge beating. The selling has actually come in on high volumes as well. So what's making you bullish on something like Federal Bank? I know the numbers definitely surprised the street, and that was the time when the stock started moving up.
Yeah, no. So, in the last 6-7 quarters, Federal Bank, barring the previous quarter, Federal Bank's NPAs were a concern. Previous quarter, things improved profitably, improved a lot. I think why the stock has taken a beating the last two trading sessions is on account of news coming in from Kerala, because it's got about 60% of its book there. So it's a Kerala-based bank, and I think with the kind of devastation we've seen in Kerala, I don't know if this is an overreaction or if it's in line with what's going to happen. I don't think in 2 days anybody can come up with the exact damage that will happen to this bank on account of what's happened in Kerala. But be that as it may, I think this, in fact, if at all, is a good time to buy more of this stock. So the company has clearly been in an expansion mode. They did a QIP last year at 116, where institutions did their diligence, looked at the expansion plans, and put in money into this bank. It's a smaller bank with 16,000 crore kind of market cap, and I think in India going forward for the next 1 decade, banking would still be the sector which would make maximum shareholder returns. I mean, no doubt about that. We remain an underbanked country. We're one of the best developing markets, and banking as a sector will do really, really well. Now at this time, I like these smaller private banks. With Federal Bank, I read their annual report, and I was on their management call last time. I think they were pretty positive about what they're doing. They want to increase their non-interest income, their service income, after Mr. Jhunjhunwala asked them about that. So I think everything looks pretty good, both in terms of how they want to expand and the streams in which they want to expand. The correction that you're talking about the last 2 days, I think clearly on account of the news coming in from Kerala. But I think these kind of things are actually, if at all, a good time to buy into the stock.
Interesting. Did come out with good numbers for sure. So that's an advantage, some comfort that you have, because the numbers for the quarter gone by and the commentary from Shyam Srinivasan post those numbers looked very, very solid. One last question, Rajat, and that's on the stocks that are hitting or nudging new highs, and some expensive names and some good brands out there. There is Page, there is Britannia, but 3M India, not a company that too many people speak about. I don't know if you track 3M India, but if you do, what are your thoughts here?
Yeah, so Neeraj, 3M India is a company, we recommended this stock. We had this stock in our portfolio about 1.5 years back. And so that time it was expensive. Now it's extremely expensive. Now they are essentially into packaging material and adhesives. And I thought that, that industry in India is growing a lot, with the advent of online buying and online selling. And I thought the products that they make are absolutely fantastic, and with every sector growing the way it is growing, that this company should do very well. Of course, they have a 75% holding from 3M USA, so very clean holding structure, very transparent. But the valuations at which it's trading right now in such overvalued markets, I would actually stay away from it. If I remember correctly, it was around 13,000, 14,000 levels at which we bought the stock. Then we sold it off. Today it's trading at what? I don't have it here, 26,000 rupees a share, something like that. So I think it has run up a lot and remains extremely, extremely overvalued. So I don't know what kind of growth projection you factor into this company with the products that they make, their Scotch Guard and tapes and everything. I would actually be a little hesitant in buying this kind of overvalued stock in these markets. Yes, if markets correct next year, 2-3 years, if I find this stock cheaper, this is definitely a great company to buy. I'd be looking at that constantly, but not recommending buying or even holding right now.
Okay, Rajat, we'll leave it at that note. It's nudging the 25,800 mark in today's trading session. That's 3M India and MNC, which has been performing really well in the last 3 to 6 months. Well, moving on, it's one of the youngest banks in the country, but microfinance lender turned universal bank, and that's Bandhan Bank, is now the most expensive listed bank in the world. Shraddha Babla is here on chart of the day on this one. Shraddha, over to you.
Well, yes, Bandhan Bank has become the world's most expensive lender within 5 months of making its stock market debut. Now, the micro lender turned universal bank trades at a Bloomberg estimated price to book value multiple of 6.83 times, which is the highest amongst peers, having a market capitalization of over 5,000 crores. A robust growth in balance sheet, elevated margins and stable asset quality has aided the bank's return ratios, and hence it trades at that kind of a premium. But not only that, 5 out of the 8 most expensive listed banks are Indian private lenders, including IndusInd Bank, Kotak Mahindra Bank, HDFC Bank and RBL Bank. The rest are from South Africa, Indonesia and Vietnam. So highlights how Indian private banks have been faring in comparison to their global players, and that's today's chart of the day.
Okay, Shraddha, thanks a lot for bringing that into our notice that Bandhan Bank is not only the most expensive bank in India now, but almost in the world as well, on price to book basis. I want to pull up the chart of Prime Focus. It's just gone up, I guess, in the last 2 to 3 minutes of trade. There you go, it's up 19%. For the majority of the session, actually, it was just about flattish, and now it's locked in upper circuit with gains of 20%. I don't know if there is any development which is coming or not, but it's gone up on very high volumes too. Almost 7 lakh shares have been traded vis-a-vis only 14,000 which were traded on NSE on Friday. So, Meet, on the charts, what do you make of this move?
Can you please repeat the stock?
Prime Focus.
Well, see, I think the stock is looking good to me. Stock can give good move from present levels, and those who have taken long positions at the current market price, they can hold on the existing long positions, and if anyone wants to initiate a fresh long positions, then they can go ahead and initiate the long positions at the current market price. I think from here on we can see a move of around 8 to 10 points. Today we have seen a move of around 15 points. So those who have taken long positions, they can hold on the existing long positions with a trailing stop loss to be placed at around 83, 84 levels on lower side, and on higher side we can see move till 95 as an immediate target. Around 95 there is a 200 DMA, so if the stock is able to break 95 on closing basis, then we will see a good move in next couple of months. Immediately, for a trading perspective, 95 should be the targets, and 83, 84 should be the trailing stop loss.
A couple of other stocks that are moving up. So 2 days on a trot now. Small cap stock Crest Ventures is up another 10% in today's session after being up about 9 or 10% in Friday's session. So if you pull up the last 7-day chart, you will see a downtick and then a sharp uptick the last couple of days. So this one has done well. The others, this is the 7-day chart, 25%. The other stock which had a positive piece of news in Friday was Adani Enterprises. I think a Queensland court or one of the Australian courts has squashed the petition of one of the environmental groups. It came in at about during market hours. The stock rallied a little bit maybe then, but up another 5% today on 15 million shares, by the way. The volume's extremely high. Hemen, can I request you to look at both of these stocks?
Yes. In terms of Adani Enterprise, frankly speaking, we needed to correct a bit more. That hasn't happened.
More? I mean, it's just not corrected.
Yes, that's an understatement. Absolutely right. It hasn't corrected. So one would have thought it would have come to 170, 165. But now it spent some 14 trading sessions moving sideways, Neeraj, and now it's sort of broken out today. Like you said, volume spike. So I think it looks good, despite the very minor or very shallow correction, frankly speaking. I think we're looking at a further upside distinctly. And the other stock that you mentioned is Crest Ventures. Volume spike up on Friday, weekly bottom in place, upward bar reversal coming in last week. Levels to watch 180, 140, resistance 225. A minor cool off from.
That's too many numbers. What should one do, if anything?
I think closer to 180, it's a buy.
Closer to 180. Okay. By the way, there are a couple of other stocks which we'll talk about after the break because we need to take one. RBL Bank is nudging new highs. It's at 586 or 587. So a really good move in the session today. And Navneet spoke about Prime Focus, one stock that's really buzzed in the last few minutes. I think Nalco is another one which has inched up in the last 30-45 minutes of trade. Look at that sharp uptick, up about 3%. Nowhere close to Prime Focus really, but buzzing in trade for sure. 12-minute shares traded in that one too. Time for a break on Countdown. On the other side, we get you the Fab 4 stocks of the day. 3:15 will also tell you what dealings are recommending in the session today. And then at 3:20, we'll get you some closing strategies.
Welcome back. You're still watching Countdown with us on Bloomberg Quinn. Just 28 minutes to go for markets to shut shop, and it's been a great start to this new week. Nifty is holding on to its gains, still above the mark of 11,555, and Bank Nifty just, I guess, 100 points or less than 100 points away from its all-time high levels that we've seen around the mark of 28,379. So watch out for that one. Let's quickly do a check of the European market indices too, and check how CAC, DAX, and FTSE are trading today. So all the three key indices are doing pretty strong, out of which the German index is up nearly 1%, and CAC and FTSE 100 are up almost 0.5% in trade. But back home, there are a lot of stocks which are buzzing around. We'll be getting you some technical views and fundamental views going during the show. But as of now, let's head across to Yash Upadhyay to find out what's featuring in his list of Fab 4 stocks for the day. Yash, over to you.
Good afternoon, Navneet. So, well, we could have had a Fab 5s today, but ex-L&T, there are quite a few movers. We'll start off with Mangalore Chemicals. That one's up about 10% today after the company received the Environment Ministry's nod for the expansion of its facilities. Now, put together all of its facilities, which includes ammonia, urea, NPK, the company's existing capacity, which is about 11.5 million tons, that they plan to scale up to about 24 million tons. So more than doubling their capacity, which is a big positive. LG Equipments is another stock. This one's up about 6% today after ICICI Securities, they came out with a note initiating coverage on it. Now, they have assigned a buy rating and a target price of 350 rupees, which despite of today's move accounts for more than 15% upside from the current levels. Now, they believe that the company would benefit from the uptick in manufacturing activity, and they expect their revenue and net profit to grow at a compounded annual growth rate of 18 and 29% over FY18 to FY20. Tanla Solutions is an interesting name on our radar. It's a small cap company, has a market cap of about 450 crores. It's locked in an upper circuit of 5% after the company said that it has entered into an agreement to acquire Carix Mobile for about 340 crore rupees in a cash plus stock deal. Now, the breakup for this is that they would be making an upfront payment of about 112 crore rupees and would be issuing equity of about 125 crores to the existing shareholders, while the balance 103 crores would be the debt that would come onto its books. And the last stock that I want to highlight is Divi's Lab. This one's hit a fresh 52-week high today. The stock has been going up for the last few trading sessions, with volumes too coming in significantly higher, almost 3.8 times the 20-day average. Back to you.
Interesting. Thanks a lot for that, Yash. So some interesting stocks and interesting movers out there in trade today. The list of names which are doing well in the session at the broader end of the spectrum is very, very impressive. Just before we get in Yogesh Mehta of Motilal Oswal, we'll talk to him at length about some of the stocks that even Darshan was talking about from the Motilal Oswal report, companies that have given good numbers and have moved up in trade. But just a quick question. I was mentioning about this stock before we went into the break. Sumit Bagadia, RBL Bank at 589, nudging new highs. Is there more upside?
Yes, there is more upside left in the counter. Stock is looking very good on charts. I think from here on, 600 will be the psychological resistance for this stock. Once the stock is able to break 600 on closing basis, then we will see a move of around 10 to 15% in next couple of months. So those who have taken long positions in RBL Bank, they can hold on the existing long positions. And in fact, the stock is looking strong on charts, so it's better to initiate long positions at the current market price also, because I think immediately the stock will break the levels of 600 also, and from there on we can see a move till 650 or 660 levels in next couple of months. So for a trading perspective as well as for a medium-term perspective, one can initiate long positions in RBL Bank.
Yogesh Mehta of Motilal Oswal with us on the show, and as I said, we'll talk about a bunch of those stocks as well. But Yogesh, good afternoon. Thanks for joining in. Well, that's a new look, Yogesh Mehta. Yogesh, the company that we were talking about. Let's start off with that because we are on that conversation. I believe you guys in the past have been bullish on RBL Bank. What's the stand now? Because while it's not as expensive and maybe as maybe a Bandhan might be, but it still is an expensive name, though it rallied quite a bit and has a fantastic credit card franchise. Is the risk reward in an investor's favor if he goes out and buys an RBL Bank today?
Yeah, Neeraj, thanks for the compliment. And for the RBL Bank, see, we were bullish in the past and we are bullish at present as well. So if somebody who is really looking for the investment opportunity, then right now RBL Bank, which has got tie-up with the Bajaj Finance credit card, and now this business has grown multifold, and there's an opportunity and the vicinity is there for the business to grow further far. And the management is citing 30-35% growth rate over FY19 and FY20 as well. So looking at current rally which has come in the recently in last 6 months odd, from 500 odd level to 580 or 590 today, but still there's an opportunity for investors to get into the for the investment into this stock, and probably our price target is 650 based on FY20, but it can always be revised with the growth guidance which company has given and the quarterly numbers which are coming out with this fantastic set of numbers. So that can give better returns. Right now, as of now, we have 650 as a price target. So I will say the business outlook is very strong, expanding very well, and the ratios are also very much in favor. It is not that expensive, which is compared to any other bank right now. So we will not compare with the Bandhan Bank as of now because the NIMs are far high on double digit, and here it is not comparable. So RBL Bank all in all is an investment opportunity, yes.
Hi Yogesh, good afternoon. Well, the other stock which features among those top 10 stocks which the list has is Sun Pharma, which surprised the street with good first quarter earnings despite of Taro numbers not being up to the mark. But Yogesh, the entire space now is seeing traction, the pharma pack. Sun Pharma still remains the top pick, or do you see the rally now if this continues in the pharma stocks? The other stocks also become attractive because we've seen the likes of Cadila, Divi's Laboratory, and also something like Granules India moving higher.
Yeah, see, in the large cap name, Sun Pharma still poised very confident. We are very much confident enough for the business. Once the clearance of the plant, important manufacturing plant is being cleared, then the second half, quite a few launches are there, and we believe that ex-Taro, or maybe we can include that company as well. Business opportunity for this company will get open, and that will drive the growth over next, say, this financial year, second half, and the next financial year as well. So we believe that the hurdles which are there are now very much clear, and the roadmap for this company would be much more open. So that will drive the valuation and the growth trajectory for this company. Now, compared to any other pharma companies, then yes, there are Lupin of the world. There is also again the similar problem with them. So once that Goa plant gets clearance, then quite a few lineup approvals are there, which are there in the pipeline. So that can get clearance, and of course, both have got upside. We have seen a sharp rally in Sun Pharma recently, but then also it leaves headroom is still there for the investment opportunity.
Okay. Interesting. From the companies that have come out with results, Yogesh, and your research team has come out with a note which speaks about the 10 stocks that stood out for them after this quarterly numbers. What is your favorite from that list?
Then of course my favorite would be on Ashok Leyland number 1. ICICI Bank leaves very limited room upside because it is 340 or right now, and 375 is the target. But Ashok Leyland, where we have seen a sharp decline due to this new Excel load norms, but that has proven to be again a very momentary of one of the case. But we believe that a new order book which is coming out for the buses from different places, so that will drive the order book further. And even if this happens in the Excel norms, then also it will be a one-time impact, but ongoing the business vicinity is very much strong enough, and we believe that this will continue as a momentum for the business and for 2-3 years as well, and the expansion is very much on the card. So we believe that 150 as of now is the target, but still it can get opened up further in the future course of action, but not immediately. So 130 to 150 is 15-70% upside for this. But anyways, it is my favorite stock on Ashok Leyland. The other one which we talk about is again Titan, but where L&T Finance would be my favorite one because it has not moved that much. So if somebody is looking at really in the investment opportunity, then with 67 rupees book value for the current financial year, and next year growth will be with ROA, incremental ROA and ROE, which will around 13%. Then 77 rupees would be the book value, and stock is still available at very attractive valuation. The businesses are there, which are 7-8 businesses right now spread over 24 states, and the business is growing 86,000 odd kind of a book, loan book. So there they are growing very consistently, and whatever the Indian accounting standard norms wise they have to provide this the provisions, they have already done, and we believe that 8 to 9 billion will be there in FY19 and 20. And this will have only one impact of 8 to 9 billion each year. But then the company is very much on the growth trajectory. We believe that price target could be in the range of 240 rupees as of now, with 3 times FY20 price per book value. So if somebody is really looking at upside trajectory, then L&T Finance is my hot favorite, and then Ashok Leyland.
Okay, Yogesh, stay on, so much more to talk about, but it's 3:12 and around the time when we try and tell you what are the stocks that could enter or get out of the F&O ban after today's session, or after today's trade. Navneet, is there a list, and what's the list looking like?
Well, 3 stocks, Neeraj, to keep an eye on, and these could come out of the F&O ban. Himen was talking about Adani Enterprises. Well, looking at the current data, it looks like that it may come out of the F&O ban for tomorrow's trade. As you can see on the screen, Adani Enterprise, the total open interest as a percentage of MWPL, which is market-wide position limit as of Friday, was 83%, and there is unwinding seen on the futures. The stock currently trades almost at day's high. But the other 2 stocks, Adani Power and Jet Airways, both of them are very close to coming out. As you can see the percentages, it's between 81.5 to 82. For the stock to come out of the F&O ban, remember, it has to fall, the total open interest has to fall below the mark of 80%. So these 3 are the stocks to keep an eye on, but going by the current data, Neeraj, Adani Enterprises definitely looks like that it may come out of the ban period.
Well, let's wait and watch. Himen is anyways bullish on this, but Sumit, should this were this to happen, that Adani Enterprises comes out of the ban, how would you trade it?
See, the stock is looking strong on charts. In last 20 to 25 days, we have seen that the stock has moved up from low levels, and from the levels of 100, we have seen a one-way upside move in which the stock has moved till 210 levels. In last couple of days, we have seen some consolidation. At present, it's moving above the consolidation range. I think stock is headed higher, and from here on, there is a possibility that we might see a move till 220 levels. Downside, it has support at around 199, 200 levels. Till that time, these levels are not taken away. It is better to hold on the existing long positions. And if there is any dip from present levels, then that should be used as a buying opportunity for the upside target of 220 and 225 levels.
Okay, that's the view coming in on Adani Enterprises. But besides that, let's just quickly take a technical view from Himen on stocks like Cadila and Divi's, which have been buzzing. Himen, if I were to ask you one pharma counter to go for, which one would that be?
From these 2 that you mentioned, or the entire pharma pack?
Entire pharma pack.
I guess I have 3 picks. Sun was the first of the lot. Aurobindo is technically the strongest, but Glenmark is the one to go for, because I think the breakout is a upward breakout is on the annual, Navneet. If you look at the charts, I think Glenmark today has posted a fresh 6-month high, where we need to close about 620 for this breakout to happen. The stock has formed a rounding bottom. I have a feeling that Glenmark is the dark horse I would pick.
Okay, Glenmark can be the dark horse according to Himen, but let's quickly go across to Darshan as well as Yatin to find out what the dealing rooms are recommending today when Nifty has once again hit fresh record highs. Good afternoon to both of you. Darshan, over to you first.
Good afternoon, Navneet. One of the sectors that's doing extremely well in today's trade is the metal counter. Look at the counters. Look at Tata Steel, it's up almost 3%. JSPL is up 3%. Hindalco is up 3%. So there is buying interest that's coming in. Dealers believe that the buying momentum and the rally in metal stocks probably will will continue. Overall, also you're seeing that commodity prices have rebounded a little bit. So overall, metals as a pack is something that dealing rooms have indicated that there is more traction. Sun TV is the other one in which dealers indicate there is a buzz of a potential corporate announcement that could come in. Some of the large HNIs have taken active position in Sun TV. So we'll watch out over the next few days if there is any bit of corporate announcement that comes in. And the other strategy seems to be, playing counters which are trading at record highs, and the momentum probably will continue. DV is trading at record highs, Bata is trading at record highs, Reliance almost at record highs. So dealers believe that the momentum in these counters will continue. The Nifty is showing rather strong momentum. They believe that even in these stocks, the momentum will continue. But Yatin, what are you hearing?
The momentum also continues in dealing rooms in terms of recommendations. So we have more recommendations than on a normal day. Reliance Infra and Reliance Capital, these are the two stocks wherein dealers are indicating that there is a lot of fund buying which is happening in. And last week also we spoke about the Anil Ambani group stocks, wherein there has been a deleveraging deals which have been going on. Probably some of them are in court processes, but the market is probably hopeful that any kind of debt resolution will augur well for group stocks. So Reliance Infra and Reliance Capital, these are the two companies wherein dealers are bullish on at this point in time. And finally, in the cash segment, we have Godavari, Ispat and Power. There is a lot of HNI interest currently in the stock. Dealers expect a 5 to 10% upside in these stocks, especially the ones wherein there is higher pellet production capacity. Godavari Power being one of them, since pellet prices have moved to recent highs. So this is one space that we need to watch out for.
Okay, we'll watch out for some of these names. Interestingly, ADAG group stocks also make their presence felt. Yatin, thanks for that. Darshan, thanks for that as well. Any thoughts here, Yogesh? Have you guys been in your dealing room discussing the ADAG group stocks or the Adani group stocks, because they have been on a bit of a tear for different reasons, albeit altogether? Adani has some fundamental tailwind to it as well, but both these group stocks have been on a bit of a tear.
No, Neeraj, we don't track Adani and Anil Ambani stock companies, so no clue on that. So we are not recommending anything out of that.
What was the talk when it came to Larsen and Toubro this morning, Yogesh? It's up about 7%. For somebody who's holding the stock and has seen the stock not do anything or virtually very little in the last 12 odd months, is this an opportunity to get out of the stock?
I would say, Neeraj, if somebody is holding Larsen and Toubro, then let them hold for some more time, because now the buyback announcement will be on 23rd of August. So might as well they should hold on to that. Stock is doing nothing. I agree. It remains in 1240 and 1340 zone, and still it is in the same consolidation stage. But what I would say that the cash the company is going to spend approximately would be that price of the open offer or the buyback price would be much more. It should be higher than 8 to 10% from the current market price at present. So there is still more room to go. So an investor should not be in a hurry to get out of the stock at this point in time. Better wait for the outcome. And if somebody is holding this L&T company shares, then he must be a patient investor over long term. So one should not be very much, should not be impatient about their holding right now.
Okay, some view coming in on a couple of these stocks, but clearly I think the Tata Group stocks today have been doing pretty well, be it Tata Motors or Tata Steel among the companies which feature in Nifty. And Reliance Industries, it's inching closer to 52-week high of 12. No, actually it has hit its fresh 52-week high today of 1236.8. What should one do? Book profits or wait it out? Or trail stop loss?
I think a trail stop loss would be a safer option. Frankly speaking, now need a 10-year breakout, so I think it will defy gravity for quite some time, because 10 years it has not done anything. So I think a tear-away rally, and it's not going to stop in a hurry. So I'd suggest a trailing stop, because it's still a mild overbought, but it still seems like it's going to go up.
Interesting. Okay, so about 320. Let's get in the closing strategies as well. Sumit, let me come to you first. Your top closing strategy today.
Well, metal stocks are looking good to me. We have already given a buy call in Hindalco. Now Tata Steel is looking good to me. I think above 600 we can see stock headed towards 620 and 625 levels. So for a trading perspective, one can initiate long positions in Tata Steel at the current market price, with a stop loss to be placed at 589, 590 levels on lower side. for the upside target of 620 and 625 levels.
Even what about you? Your top closing strategy?
I'd have a BTST on Nalco. There's a OI built up. Stock looks to be ending a 6th trading session correction. It's on the verge of getting an upward bar reversal. But it's a small stock, so small stop loss, small target.
Okay, by the way, just a correction. The stock that Heyman is recommending is Nalco, not Hindalco. Small stock, and what's the target, Heyman, you said?
We are at around 72.
It's already there.
Yeah, we are at 72. So stop loss of 70, target of 76. But frankly speaking, a realistic target looking at the trading range would be around 1.5 and 3, but 2 and 4. 2 rupees stop loss, 4 rupee target.
Okay, this is a short-term intraday or rather a BTST kind of a call.
Yeah, it's a BTST call.
Okay, that's BTST on Nalco on back of OI build-up is the call coming in from Heyman. Just one more stock I think which just inched higher is DCB Bank. If you could just pull up that one. I think it's sitting at day's high right now, 5% higher for this one. Any trade that you foresee here?
I think the stock is ending a 10-month consolidation phase. Strong support at 166, 155. Stock is heading towards 185, 205 and 230. This is a 1-year call. From a shorter term point of view, we are at 173. Anything closer to 171, 172 seems like a buy. But I have a feeling this is turning for the good from a longer term point of view.
Okay. Yogesh, I'm giving a difficult one to you. Between HDFC Standard Life, which I know you've been liking for a while, and HDFC AMC, which has come off a little bit from the levels that it was trading at. If you want to make a 5-year, 7-year, 10-year, whatever the time frame investment may be, and if you have to choose one of the two.
Choose one of the two. It's too difficult to
that's
select
why I'm asking,
from
and that's
this.
why you're answering.
See, I am looking at 5 years plus kind of horizon for HDFC Life as well as for HDFC AMC. The way AMC business has grown and still the vicinity is very strong about the AUM based business and the managed funds. So these all have got very robust future here in India at least. So I think that AUM will grow robustly, and I believe that it will be a very strong contender. Not looking at the current valuation, but there will not be any correction. Earlier I don't remember, but I have compared this D-Mart. When it got listed, it was at 600 rupees, double the price of the IPO price, and yet it is 2.5 times more from the listing day. So I believe that gradual inching up of the story will remain there in HDFC AMC, and choosing between the two, then this time I will opt for HDFC AMC.
Or HDFC Standard Life as well.
Yeah.
Very interesting. Okay. And last question from my end. Irrespective of these conditions, what's the favorite stock to invest in currently?
For current environment, it seems that consumption story will still remain very robust for India. And there it remains that if somebody wants to have a very conservative approach and it's a blindfold buy, then it would be a Britannia one which we like the most in consumption sector, though we like Hindustan Unilever, Pidilite as well. But Britannia will have a very strong contender of the growth, which is a pioneer in the biscuit segment, and now in the non-biscuit segment also they are there in the bakery items. So I believe personally that yes, it will be a high, the consistent ROE and ROC delivery company. And not looking at the valuation, but Britannia would be a very good investment opportunity, investment buy from the current levels as well.
Okay, Yogesh. In fact, consumption remains the street consensus as well, I guess, for 2018. Thanks a lot for joining us this afternoon and taking us through your views on the markets and also a couple of individual stocks. Well, it's looking like a very strong closing. I think the good news is that Nifty has sustained the gains that we saw, or rather build up more gains from the opening levels. I want to pull up Infibeam. That's the other stock which has hit its fresh 52-week high in today's trade, and currently that stock's trading with gains of nearly 5% in trade. Sumit, if I could come to you on the charts, this is one of the beaten down counters, but we've seen some bit of recovery, and now today it's hit its 52-week high. Would you take a trade here?
Which stock?
Infibeam.
Yeah, Infibeam. See, the stock is very volatile. This stock has given a good move in last 20 to 25 days time horizon, and stock is trading at higher levels. I think those who have taken long positions at lower levels, they can hold on the existing long positions with the trailing stop losses to be placed at around 201 or 202 levels. And on higher side, there is a possibility that we might see move till 216 or 220 levels. Better to avoid fresh long positions at the current market price.
Okay, that's an avoid call coming in on Infibeam, which hit its fresh 52-week high. Cummins India, that's seen gains of almost 4 to 5% in today's trade. I don't know if there is any sort of major build-up that one has seen on the futures, but the stock definitely is sitting at day's high at 712, 713. What would you do?
Well, it's a buy. A breakout comes in about 715 Navneet. We are seeing a weekly reversal come in. So we have a medium-term bottom in place. There has been a volume spike up during this month, frankly speaking. The month is not yet over and we are already at 80 lakhs, which is highest in the last 2 months, is the third month. So it looks interesting. Medium-term bottom in place. Further upside seem like a cinch, but it's more of a positional trade, a long trade.
Okay, long and positional trade on Cummins India. Just want to pull up HCC, that high beta counter. We've not spoken till now. It surged almost 19% in today's trading session, or 20%. Remember, it's an F&O, so that circuit limit of 20% will not be applicable for this one. And the other one is Idea, which has gone up on good amount of volumes in today's trade. Idea also sitting with gains of nearly 4 to 5%. All right, just 3 minutes to go for markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, what a start it has been to this new week.
Yeah, well, if we needed a good start after 4 strong weeks, we got one today. More so for the Sensex, which is up almost ending at the highest point of the day, in or about these levels. But not a bad day for the Nifty. The Nifty bang to 0.5% is probably not bad. Could have bargained for more. Could have bargained a bit more for the mid caps and the small caps, though I must say. The headline numbers on the benchmark indices, especially the small cap index, leave a bit to be desired. But the 500 still up about 0.75%. The mid-cap index, similar gains, so not a bad day of trade. Let's look at the gainers first. And select oil and gas, Larsen and Toubro and a few others make up this list. So L&T, the top mover, up almost 7%. Tata Motors has had a good run today, up about 4.5%. ONGC and Reliance Industries bring up the list of the gainers on the oil and gas space. There is strength in commodities by and large. So Hindalco, Tata Steel, Vedanta also doing rather well for themselves in trade. What's not done well though? Infosys corrects about 3%. Weakness in Titan. HCL Tech follows suit, about 1.5% lower, and some losses to auto names like Maruti Suzuki and Eicher. So Tata Motors on one side, the other two on the other side. It's been not too many heavyweights which have corrected except Infosys. And which is why I think we've had these gains, all-round performance. What about the broader end of the spectrum, though, Navneet?
Good day, Neeraj. Even for the broader markets, there were a lot of stocks which were moving around. So let me start off with a couple of gainers. We mentioned Prime Focus, which moved in the last hour of trade. In fact, that stock was locked in upper circuit at one point of time. And actually, it's closing also with gains of 20%. So watch out for this one in tomorrow's trading session. Sequence Scientific is the other one, which went up on good amount of volumes today. So that's closing with gains of nearly 15%. And Man Infra too did well for itself. Some buying momentum was seen for this counter. Man Infra closing with gains of almost 15%. Some of the futures and option stocks, Infibeam hit its fresh 52-week high in today's trade. Remember, it's been a beaten down counter. So we've seen revival coming in most of these stocks, 5% higher for Infibeam. HCC saw a surge of almost 20%. In fact, that was your top F&O gainer also for the day. 21%, finally closing above that mark of 20%. And Idea went up on good amount of volumes in today's trade. I think over 2 crore shares were traded for this one, 5% higher for this one. And Adani Enterprises likely to come out for from F&O ban for tomorrow's trade. So watch out, 4.5% higher for Adani. And Cummins India too saw good gains today. In fact, 4 to 5% gains seen this one. Technically, Hemain also suggested that it could be a buy. 5% higher closing at day's high. On the losing side, Vadilal Industries saw cuts of almost 20%. In fact, this was locked in lower circuit for the day, 20% lower for this one. Some companies having exposure to the state of Kerala unfortunately saw selling in today's trade. So something like Muthoot Capital and also Federal Bank, there were some short positions actually seen for Federal Bank in today's trade. Let's see if there is any sort of bounce back which can be seen for stocks like Federal as well as Muthoot Capital. And lastly, I just want to highlight Something like Tirumala Chemicals from the broader markets, I think there was some selling seen for this one. Let's just pull up that counter, and I think the losses were somewhere about between 5 to 6% for Tirumala Chemicals. So, Neeraj, if you look at the losses, I think there were few companies, because of some reason here or there were losses between 5 to 6%, but there were more gainers definitely for the day.
Yeah, the market breadth kind of maybe suggests that too. So all green on the screen, the market breadth in favor of the advances, but a bit of a narrowing down for sure. Close to, well, slightly over 1:1 in favor of the advances, but no prices for guessing that the contributors list would have Reliance, L&T, and maybe the HDFC twins.
Yes, Reliance hit its fresh 52-week high today, and L&T with almost 3.5% weightage on Nifty. I think after a long time we're seeing 26-point contribution, and HDFC twins definitely contributing. And on the losing side, I think it was a bad day because of the resignation news coming in from the CFO of Infosys that dragged the markets lower by almost 22 points.
Yeah, had it not been the case though, that would have been a rocking rally for the Nifty for sure. The participation should come up on your screen, and let's see how the volumes have shaped up today. Par for the course, I would reckon.
Yeah, I mean, start of the week, it's definitely just above average or average volumes. Total turnover of 6.1 lakh crore, and the NSE and the turnover is just above average of 5.5. And cash, Neeraj, as we've been highlighting, it's been in the range of 30 to 34,000 from NSE.
Yeah, so not a bad day of trade all in all. But final thoughts from our experts then. Sumit, how do the mid-cap and the small-cap indices look right now? We've seen what's happened to the large caps today. The calls have come on Nifty Bank and the Nifty. What about, say, the NSE mid-cap or the BSE small-cap? How do those charts look?
Well, I think mid-cap and small-cap will take some time to give good move. I think at present, the frontliner index will give good move. Like large cap stocks will give a good upside move. As far as mid cap and small cap index is concerned, I think we feel that after a couple of weeks or after a couple of months, we will see a good upside move in mid cap and small cap. But at present, the time is for large cap, so it's better to select the large cap stocks. As far as index is concerned, I think it will face some resistance at around 19,600, 19,700 levels. Once these levels are taken away, then we will see a good move. Till the time these levels are not taken away, it's better to be on large cap side.
Okay, Himid, what about you? What would be the approach for tomorrow's trade?
I think everything is fine, but the Nifty bank needs to now take out 28,377.
That's the all-time high.
Yeah, but there's no question of shorting anything. But I would still be slightly more script specific. I think I have a feeling that KPIT is a short, and you have a huge Y built up in TVS Motors, Navneet. So that is sort of woken up after some time. So that could be a long. So I think it's script specific. Everything is fine. 11,500 and 11,360. I think our supports the Nifty needs to hold. Otherwise, it's all fine.
And the next target 11,700 according to you?
Yeah, I have a feeling we should be going towards 11,780, 800. Not one way, but yeah.
Okay, Evan, Sumit, many thanks for joining in today and giving us your thoughts and your recommendations. Really appreciate your time. With that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thanks so much for watching.